Yo, good morning, everyone, and welcome to the Morning Market Report. I am Army Piper. Right now, we're fighting this 200-day simple moving average. Just take everything I said last week, repeat it. That's where we are currently still at, fighting that 200-day simple moving average. But looking at the crypto bubbles here in the past hour, guys, we are seeing a little bit of a mixed market here. A little bit of red, a little bit of green. Just a struggle bus, really. And if you look at the actual market open today, guys, right now, pretty low and flat. NASDAQ just up 0.02%. We got the S&P up about 0.3%. The Dow Jones up 0.5%. But we are seeing the VIX over there slowing down just a little bit, giving us a little bit of chill out on that volatility. We're going to be looking at this. We're going to be looking at all the events this week. We had some economic data this morning. We got some big stuff coming up this week. FOMC on Wednesday. We're going to be breaking all this down today with special guest Darron Does Things right here on the show, guys. Let's get it. You know what time it is. Class is in session. Good morning, everyone, and welcome to the Morning Market Report. I am Army Piper, and this is the show that we bring you guys the news, the headlines, the economic data, everything that you need to have knowledge, because knowledge is profit. Shout out to everybody in the chat right now. Appreciate you all being here. And let's go ahead and bring up my co-host. You guys know him well. Where is he at? There he is. He's right there. OC guy, how you doing, man? How was your weekend? How are you feeling about everything today? About the markets themselves, the week ahead. Give us the OC rundown, man.
Well, this weekend was a little bit shaky for me. I did not trade much. We did some decent movements. We took some profits, and that was basically about it. But when we're digiting, we're not just going with a whole lot of capital. So it was a good run up, but it was a little bit intense because I finally got connected to the network. So basically, all of my solar panels are up and running, and man, the full load of my house, it's only 1/3 of my full production. So the sad thing is that the rest of it, I cannot sell it, and not just yet. It will take around 2 months of paperwork. But other than that, man, I'm just looking for things to plug in, and I'm kind of like just turning on the microwave just because.
Just because I can. Why not? Living that big life down there in Mexico, man. Hey, big shout out to Alex O, Crypto, and the gang. The Otter gang just rolled into the stream, so we appreciate y'all being here. Guys, drop an Otter in the chat. I had my own emoji over there this morning, and I was very happy to see that, so much love to you, Alex O. Guys, drop that Otter in the chat for Alex O and the Otter gang. We appreciate you all. But hey, before we get into the news today, I want to go ahead and bring up Mr. DDT himself. Darron Does Things. We got a special guest today, and I'm very happy to have him on here with us today. What is up, DDT? How you doing, bro?
Yeah, morning all. Yeah, all good. Relaxed weekend apart from some chop in the price action, but yeah, all good. No complaints.
Do you have any rain over there?
It's overcast today. Yeah, weather's actually getting a bit better now.
Yeah,
into spring in the UK.
We had crazy winds here all last week. Matter of fact, a couple of weeks ago while I was on my cruise, it looked like Mars here from the blowing sandstorm and the sun setting. It was just orange. The whole freaking city was orange. It was crazy. So I don't know. There's times that I go, I would never live in the UK because they get way too much rain for me. I'm a sun person. But then, out here in the desert and I get sandstorms, I'll take the rain over that any day of the week. So, but yeah, it's crazy weather, man. Crazy weather. So we're going to jump into the news, DDT. When we come back, I'm going to have you break down what you're seeing on Bitcoin right now. We'll give the current setting for Bitcoin this week, and we're going to talk about FOMC and how all that is going to play out. So let's jump over into the news. We'll be right back with DDT and the OC guy after we break all this stuff down. You guys hang tight. Looking over here at the news, let's go ahead and get this all adjusted here for you. Get rid of them white lines. Why are you doing that? That is so weird. Oh, I see why. Because I've got another one back there. There we go. Perfect. All right, let's go check out the news here, guys. Looking at the dashboard, first of all, right now, currently, the total market cap coming in at $2.714 trillion. The trend is at $3.588 trillion. Undervaluation on total market cap right now is undervalued by 24.36%. That is based on the median average of the total market cap on a running average. And looking here at Bitcoin right now, sitting at 48.6% wristbands. Those wristbands, by the way, are telling us that right now we should be doing a dollar cost average of 3 times your DCA right now, based on this current threat level here. So looking at the Bitcoin dominance right now, guys, Bitcoin dominance is sitting with stable coins at 60.75%, without stable coins at 66.34. So we are seeing that spread continue there, about a 6% spread, a little bit less than that, a little bit less than a 6% spread there on dominance. So a lot of that money coming out of Bitcoin, adjusting the dominance, going in the stable coins right now. Shout out to Crypto Archie in the chat. What's up, bro? And I saw Tradefly in here too. Lunar Beaches, man, I love all of the people that flow through here. Appreciate you being here, Archie. Big shout out to you guys. If you guys don't follow Crypto Archie, you're missing out. That's all there is to that. Let's go check out and see what we're seeing here on the fear and greed for today. Fear and greed index. There we go. Fear and greed right now currently coming in on Bitcoin at 32. We're still sitting in fear. Are you guys fearful? Let me know in the chat if you guys are feeling the fear that this fear and greed index is saying that we're exposed to right now. If I'm not overly fearful yet. I do think that we are going to have a little bit of a move to the upside at some point. I've got a heat map. I'm going to show you that today. But I don't think that we're going to get higher than our previous all-time high until we get some of this macroeconomic data under control right now. The one thing I am watching is this right here. And this is the Bitcoin long versus shorts ratio on centralized exchanges. We still have more longs than shorts right now, which tells me I don't think we're going to get that pump as long as the majority of people are saying, I want to pump because I'm doing a long. So I do think that this needs to come down a little bit more. This was sitting at about a 75% long, so we're down to 60% now. According to Binance, Bybit, and OKX, I think that once this starts to break that 50% threshold of shorts versus longs, we then will see that opportunity for the market makers to go, okay, we've got a little bit more shorts now than longs. Let's go up there and run into some higher price action, and then we can bring it down once we grab that liquidity. So that's what I'm seeing there on that. Let's see what else we got in X marks the spot today. MicroStrategy, aka Strategy now, has acquired 130 Bitcoin for $10.7 million. Average price on that, $82,981. According to historics here, that means we should get a price drop happening on this, because typically when he buys, it dumps right afterwards. So Michael Saylor's Strategy, though, acquiring some more Bitcoin there. Titan to Crypto. This is a big one. He says, when 86% say no to Bitcoin, it might be time to say yes. Markets reward contrarians. Are you with the herd? This was a CNN live poll that they did, and it said, would you invest in Bitcoin? It had 20,839 votes. 86% said no. They would not buy Bitcoin and would not invest in Bitcoin. So I think what that really tells me is we're quite early, guys, quite early here. So looking at 86% saying no, we're saying yes. That means we're going to be the early adopters here. What else we got here? Looking on chain, we've noticed multiple fresh wallets withdrawing large amounts of Link on Binance. I got an article about this. We'll talk about this in a little bit. Look on chain also. A wallet just sold 1,014.67 Ethereum at $1.92 million after being dormant for 3 years with only a profit of $126,000. So somebody that thought ETH was mooning forever decided to buy this stuff 3 years ago and decided, okay, I'm done with messing with ETH. It's not doing anything. And they sold it now at a small profit after holding it for that long. At least they held it that long, but I'm with them. I thought we were going to have a lot more price action on ETH this year. Kabisi letter. This is some breaking news 21 hours ago. Conference Board leading economic index is called the LEI, declined 3% year over year in 2024, posting its third straight annual decline. This matches the 3-year streak that occurred in 2008 financial crisis. Month over month, the index has experienced declines in 32 out of the last 34 months. Over the last 6 months, the biggest drags on the index were consumer expectations for business conditions and the ISM New Orders Index. So the LEI is now down 15.5% from its peak, nearly as much as what it was in the 1970 and the 1980 recessions. Is the economy slowing? I believe that it is. So there you go. TradeFly, you have a good one, man. I appreciate you. Go do your trade wars. Go get them, bro. Go get them. The Kabisi letter. What is happening here? This one, this was bad. So if you guys don't know, back in the day, 2008 housing crisis, we had a lot of borrowers that were overextended, overexposed. Right now, data coming out on that, a record 64.5% of new FHA borrowers had debt to income ratios higher than 43% in 2024, meaning their total debt was 43% of what they brought in annually. The share has risen by 10 percentage points over the last 5 years. To put this in perspective, in 2007, this percentage was nearly half of what it is now. So in 2007, come back here. In 2007, the level of FHA loan portfolios for debt to income was about 35%. We're again at 64.5% right now. So almost half of what it was back in 2008. It's double that now. So in other words, the FHA loan portfolio is significantly more risky than what it was before we had the 2008 financial crisis. Meanwhile, approximately 7.05% of all FHA mortgages issued in 2024 have gone seriously delinquent, meaning that they are more than 90 days behind on making their mortgage payment. And that is higher than what we saw in 2008. Also, are we in a subprime housing bubble? Welcome back. We missed you. Also, some other news here in the Xmarks spot, just 21 shares to shut down Bitcoin and Ethereum futures ETF. Liquidation is expected to take place on March 28th. The affected funds include the ARK21 shares active Bitcoin Ethereum strategy ETF and the ARK21 shares active on-chain Bitcoin strategy ETF. March 28th, guys, they're expected to have a liquidation. So be watching for that. And then lastly here, we talked about the job numbers earlier last week, late last week. I said, look, some stuff's not adding up here. If you look at the JOLTS job reports, non-farm payroll, so on and so forth, and then you take a look at the household surveys, it's showing that about 600,000 people actually lost their jobs in February, despite the economic data being as high as what it was. Number of Americans working more than one job has never been higher. Multiple job holders hit 8.86 million in February as a share of employment. Why do you always jump on me like that? Don't jump on me like that, bro. Multiple job holders hit a record 8.86 million in February. As a share of employment, multiple job holders rose to 5.4%, the highest in 16 years. Concerningly, Americans holding a primary full-time and a secondary part-time job spiked 395,000 jobs in February to a record 5.37 million. This reflects 3.3% of the total employment, the highest percentage since 1999, all while part-time workers for economic reasons jumped 460,000 jobs last month to 4.94 million. It's the highest since May 2021. Millions of Americans are working multiple jobs to afford basic necessities, guys. This is part of that job report stuff that I was breaking down for you. We are getting a lot of job numbers. These are not new jobs coming into the marketplace. These are people picking up additional jobs to be able to pay their rent and buy groceries. And, if they're really bougie, buy eggs. I'm just saying. Let's go check out these prices right now on the markets, guys. Bitcoin right now at 82,811. It is flat for the day, down on the hourly here. Ethereum is up 0.6% on the daily. Maybe they should have waited to sell all that ETH. They could have got squeezed a little bit more into that profit margin. But they are at Ethereum's at $1,896 right now. XRP up 2% on the daily at 232. BNB's at 5.1%. It has been doing really, really well despite all of the pullback. When it has its moves, it's been doing pretty good. It's sitting at 628.90 right now. Solana's down on the daily and the hourly. It's at 127. Cardano's up 2.5% at 71 cents, down on the hourly also. Doge up 2.4. Any big movers in here? Let's go see here. What has really jumped up here? Looks like Litecoin's up 4.1%. That's not great, but it's better than a lot of the others. It is sitting at 92.60, and that is rounding out your top 20 there. on the crypto bubbles. Let's go see, let's give this a refresh and see what we're seeing here on the Dow Jones, the S&P, and the NASDAQ this morning. Dow Jones up about 0.4% right now, sitting in the green, so forth. So S&P up about 0.41%, and the NASDAQ up a measly 0.15, just squeezed out another 0.02% there. Russell 2K up about 0.44, but look at the VIX. I told you guys, the VIX, I like to see this below 20. That is when we get into an area where the volatility will quit wicking us out of our trades and will allow us to actually trade the trend. That VIX right now sitting at about 20.95, about 1% off from breaking below that 20 points. So let's go and check out the bonds and the gold today. Bonds, 10-year treasury yield is dropping down. This is a good thing because we do have to refinance that that debt, that $9.2 trillion in debt sometime this year. And so that 10-year yield coming back a little bit, it's a good thing. Matter of fact, a lot of people are thinking that the FOMC will start cutting rates in May. We'll have to see. We'll take a look at those numbers here in a second. Looking at the economic calendar, we did get some bad data this morning, guys. It's going to be this New York Empire State Manufacturing Index. Okay, it was at 5.7 to the positive side. It was expected to be down about 0.75%. They had a forecast that would be up to. It actually came in negative 20. If you guys don't know what the New York Empire State is, manufacturing index is, it's based on data compiled from the survey of 200 executives from the companies in the manufacturing sector of the New York State area. Participants report the change on 11 indicators, including level of general business activity, new orders, shipments, inventory, so on and so forth, number of employees, anyway, the New York Empire State Manufacturing Index fell 20 points to negative 20 in March 2025, the lowest since May 2023, and below the market expectations. Both new orders and shipments fell, with the new orders index dropping approximately 14.9%. People do not want to buy anything right now. That is because of economic uncertainty and the tariff scare. So bad number there coming in. Top that off, we also had retail sales was expected to be at 0.6 to 0.5 on consensus versus forecast. Previously, it was at 1.2 percent on the downside. It was 1.9. They got revised even further to the downside, and it only came in at 0.2. So retail sales definitely slowing down. It is higher than what it was last month, but still a slowdown from what they were expecting, not getting that growth, guys. Tomorrow, we're going to get housing and building permits coming in. That's going to be the big data tomorrow. Nothing major there, just building permits. Which is expected to be down right now, and then housing starts, which is expected to be up or down, depending on if you look at the consensus or forecast. So we'll have to see on that. But the big one that everyone is talking about this week, it's going to be on Wednesday, March 19th here, and it's going to be the FOMC with the federal interest rate decisions. So that's coming in on a Wednesday. Let's jump over and see what the CME group is telling us here. And I'm sorry, I can't do anything about the white screen on this. I've tried. It does not work on here. It turns the background in a nice color, but not the actual chart. So you're blinded. Apologies. Guys, right now, let's give this a refresh, make sure we got the most recent data here from the CME group. Yeah, we're looking at 99% chance right now of no rate cut this Wednesday. It's going to be staying flat, staying the same, only a 1% chance that they will cut rates. Let's look at May, because this is when people are expecting that we will see one. Currently, right now, 22% chance of a rate cut in May, 77.8% chance of nothing, no change, pause. And then June, we're looking at that's the first opportunity that we get for a rate cut. 70% chance of a rate cut coming in June. That would be the first time that I would look at seeing that actually play out, because I do think that by summertime, the rates will be getting pushed down so that the federal government can refinance $9.2 trillion in debt. You got to remember, the last time they financed that, we were at a 0 basis point for the Fed, and now it's like 4.5 or 4.25, whatever it is now, 4.25, I believe. So yeah, therefore, it is very likely that they will start to push these rates down. Big shout out to Mark Dutch in the chat, bro. I missed you, man. Good to see you here. We do have this one article here, and then we're going to jump over to DDT and let him show us what he's seeing on the charts. But right now, Darren's going to do things on the chart. Bitcoin Wells shorts $445 million in Bitcoin. Traders plot explosive liquidation. So what's going on right now is this big whale. Let me get rid of this banner at the bottom. There we go. This big whale has a massive short. I think he has now closed it, or Rumor is he's closed it, but Bitcoin has shown resilience bouncing around that 200-day moving average. We're going to talk about that in a second, obviously. But this well went short. So according to data from Hyperliquid and blockchain analyst on Look On Chain, the well's short position is valued at over $445 million and utilizes 40x leverage. This position comes with a liquidation price of about $85,940. And despite the inherent risk, the trader is already reporting an unrealized gain of $4.4 million on this trade. Pseudonymous trader CBB galvanized a group of market participants to target the position. Look On Chain's report highlights a coordinated effort to force the well's hand. This well still managed to turn a profit despite being hunted by a team. 11 hours ago, the team formed a team to hunt this well down, who shorted the Bitcoin with the 40x leverage. And then just 1 hour later, the team was in action, driving Bitcoin above 84,690 in a short period. So, guys, well games galore coming into play here. DDT, man, what do you think? Was this guy playing a risky game, talking about trying to 40x leverage a short with that much money? And should he have announced it? I mean, obviously it's on chain so people can see it, but I don't know, man. What do you do? What do you do when you do such a big trade that the entire market goes after you to liquidate you, man? What are your thoughts?
I think if someone's playing with that type of money, they can afford to lose that type of money. But that's obviously a contrarian view.
That's true. So that's true.
If you're putting that much on a trade, you have to be able to risk at least most of it, specifically on a 40x, because you only got 2.5% leeway from your entry. Yeah. So yeah, but we basically did see. For those that don't know, I don't know if you're going to share my chart, but yeah,
let's do it. Let's get over there.
He had his stop where. So for those that don't know, this is just one of the methods I use to kind of look at price action. So this is the Monday Asia range, which I'll actually just turn off because it's not relevant. But what we have usually is we have obviously on Friday you have a trap where you trap either side, so you trapped shorts there, moved up, trapped longs there, moved down, weakened consolidation. So now what this guy did is he had his stops above here. I think he had his stop above that high. So that's the one they were targeting. And obviously, I think some buying came in here or selling came in there. They sold it off. At this point here is where they started to initiate the squeeze. And obviously, they tried hard. They squeezed it up. They didn't get high enough because obviously it went down. What that guy subsequently did is he actually added to his trade to make his liquidation about 86,000. So obviously he's won here, right? And then also as well, he opened ETH short as well. But for the most part, he had his stop in the right place. Basically, it's above a kind of swing high or the Friday high. So, and then obviously he was prepared to add. So obviously he knew people were coming after him after looking at maybe he was watching social media or X. So yeah, that's that. So for now, I think he closed or he TP'd most of it. He still has the ETH short open as far as I'm aware. But yeah, that's that Hyperliquid whale guy. And it is a bit wrong in a way that they try to hunt him because it's basically unethical in my view. Obviously, if you want to hunt that whale down and also be open about it. So that's kind of it's frowned upon, but it's something that happens. So generally, kind of if you've seen what's kind of happened of late with Binance and Wintermute, who's a liquidity provider for Binance, they've just been swapping liquidity coins, everything, and they're just selling and moving the market quite easily by offloading a hell of a lot of spots. So that's the kind of thing you need to have a lot of money to move the markets. And I think it was I think they needed about 100 million worth of liquidity to be able to actually hunt that guy short. There was some article about it as well. Someone posted on X, I saw. But yeah, they didn't get anywhere.
No,
Just generally
and he
though.
walked away, and he walked away with $4.4 million so far. So I'm just saying,
Yeah.
not a bad weekend of trading, in my opinion. Yeah, DDC. So, what are you currently seeing on the charts right now for Bitcoin? Like, what are your thoughts for this week? Its current price action. I use the 200-day simple moving average. You were talking about that earlier, and it's pretty much been resistance. I'll show all of that in a minute in where we are on the heat map. But I'd like to see what your take is on the current Bitcoin chart and where you think we're heading this week with all the data coming out.
So for those that don't know, I'm a very OCD type of trader. I try to keep it simple, but generally my charts are quite cluttered. So for the most part, kind of the bounce that we had last week was on the 50 EMA of the weekly, which is also a key level to hold. That could have, I think it was the 300-day SMA, Piper, that we bounced off. So similar level. Weekly came into there. What happened was as well is if you move down to the daily, we had daily swing failure patterns, grabbing liquidity. So we had two levels here to grab, which we did. We had the initial one on Sunday or Monday, and then obviously Tuesday we came in, hit the Monday low, went up. But what I also do as well as part of the method that I trade volume profiles. So basically volume and liquidity is two of the main ones, but also I use Market Cipher as my main indicator to kind of Market Cipher B specifically. So basically I had a few ranges here that I was looking at that literally we've just been respecting. I can show you the volume profile. It needs to be on the 30-minute, I think. So there's a volume profile here, 15-minute, that we've kind of been respecting for the most part. We're still hitting the value area high, which is 83.7, not got above it. And obviously we've got the value area low in POC. So at 82.6 is the POC and 81.7 is the value area low. We're just ranging. We do have another range just below it, a wider range as well. So for the most part, because we failed to clear this range at this point, my thought is that we're going to probably come down into the 80Ks. And also as well, it's just this price action here it's just a kind of ranging sideways. Volume's been lacking to a certain extent. Obviously, we're getting all the scam wicks because the volume is so low. So it's not really an ideal trading situation where you want to be getting into trades kind of mid-level. So for me, kind of here is a no trading zone. I did short on the weekend, which I closed out. But for the most part, like we trade the ranges, kind of range trading. Where I'm looking at lower at this point, if I just flip out and go to like the 1 hour, at this point, I'd probably be looking for us to take out these lows. Obviously, there's going to be liquidity here because there was divergences into there, and that's why we kind of also bounced on on Sunday and yesterday. So you got lows there and you got that low there. So somewhere between, of which I think I pulled a Fibonacci from here to there. Let me just get the fibs right. Yeah, so basically we bounced on a local golden pocket there, and currently, if I can get the right range up, this one. Currently now, just below this local golden pocket, I'm thinking we probably bounce in below kind of this zone here is kind of my, or even lower, probably 80 up to like 81.4 is kind of where I'm looking for a bounce at this point. There are other levels as well. What we do use is daily naked points of controls from the volume profiles. So we have two daily naked points of controls, but where they are currently, they're not really matching with where I would like them to with the volume levels, the value area low, POC. But we have a few. Where's Frankie? We have a few kind of profiles in this range here where I'm thinking kind of level wise where we bounce. So somewhere, and plus also as well, kind of I'm saying somewhere bounce in this region. It's because I'm trained to be an if this then that. I'll wait for price to get to a range or a certain area of confluence, And then I start looking for my confirmations, which will be bullish divergences. It can be order flow confirmations, which is a bit more advanced. So trap traders, bullish CVD or bullish absorption, obviously as we're coming down. So there's a lot more. There's some simple things that I use, or simple technically in kind of the TA terms. May not be to some, but I kind of deem that for myself. So from a range perspective or kind of a price area perspective, I'm looking kind of for it to come down into the kind of, just take out these lows at least below 81.7. And then below that, I'll start looking for confirmations to go long. One thing I do want to show as well is obviously I look at money flow, which is part of our market cipher B oscillation suite. Generally, the higher time frame money flow is still not showing that we are going to hit an uptrend or a macro uptrend. So obviously we are in a macro uptrend on the weekly, right? But daily is flipped slightly bearish, and obviously sub-daily we obviously still quite bearish. Maybe like 15 minutes to 1 hour it's flipped bullish, or kind of just a change of character and moved up in this little smaller uptrend. So what I'm looking for is for kind of these higher time frame money flows to start flipping green, which will start giving me the indication that we could go higher. So generally look to sweep down, and obviously as well, once we come down, then obviously the thought is price will work its way up, and then obviously money flow will work its way up, but also as well the momentum wave sort of bottomed out, and then money flow VWAP and the momentum wave in market cipher B will move up. But those are like higher time frame 1 to 4 hours, kind of what I'm looking at now to kind of say a more local bottom is in for the time being. Where I'm probably looking to the upside as well is about 87k, give or take. These little bad boys here, this little range or range-based supply. So somewhere in that range, I don't know where my other range is, but to the upside. So basically, if I'm trading down here and getting into long here, my target's somewhere up there. I can't quickly find the which one was it? Or that one? Yeah. So obviously, I have a local value area high above 86, and I have a was it this one? 87k. There's an 87k. My chart gets messy. Call it UK spaghetti. But yeah, that's kind of my top levels to the upside for now for Bitcoin. But yeah, looking down to 80 towards 80k for a long, and then obviously if you get long there, then obviously I'm looking for higher. And we do run the risk of going lower, but I'm an if this then that type of trader, so I'll just monitor as price is kind of moving down.
Yeah, we've got about $1 billion of liquidation sitting down at those lower levels. Matter of fact, if I jump over here and show you this on the heat map, the levels you were calling out pretty interesting here, because we are seeing right now. You can see where we are from where we are. We have a large heat map area at the top of this range. And this is coming in right now between 85,200 to the top side, 85,750. It's a little bit above it here. If you look at that, that's about $1 billion also for the upside. So between, again, 85,200 to about $86,000 in line with what you were talking about. But if we look down below us, we have this heat map that starts here at about 79,800, and there's 400 million, there's 400 million, there's 347, there's a lot of liquidations here all the way down to 78,000. That would put it well into the $1.7 billion range approximately there for liquidity down there. So a lot of liquidity above us and below us at this point. It's just going to be a matter of how the markets move. I would not be surprised to see us pop up first, wash out all those shorts, and then take out all the longs and the FOMO buyers that jump in there. Matter of fact, if we jump over and take a look at what I'm seeing on the chart right now, that wick bottom that you were talking about, yep, absolutely. 300-day simple moving average is where we got the bounce. Right now, this whole weekend, we've been fighting with the 200-day simple moving average. And if we look here on the higher time frames, like let's put this on the daily and take a look at this long-term fixed range voting profile that we have here. The only thing that we have at the levels below us, because it's just a sloping, matter of fact, let's put this on like a little bit higher so you can get a little bit more price action in line with the fixed range volume profile here, we really don't have anything right now. It's just a sloping volume, getting lower and lower into a volume gap right here that's coming in at about 78,000. We do have the one thing that I call Bitcoin's last stand here, and that is based off of this little tiny nipple of volume right there coming in at about 76,000. After that, we don't really hit anything on volume again until about 73,500. So, and then that goes into this big range here. So I am watching that pretty closely. Value area high on the long term is sitting at 65. I don't think that's a threat yet. Once we break that 300-day simple moving average and get that retest underneath the bottom, OC retest and rejection, then we'll start talking about this level. That would put us in line with the chart prime's dynamic reactor coming in down there, right in line with that value area high too. So don't be surprised if this entire volume node that's in here doesn't get played with on top of that dynamic reactor for confluence. Taking a look at the multi-time frame, multi-oscillator on the weekly, you can see, as you were talking about, money flow, that's this pink line here, still definitively pushing in a downward range. We do have the histogram starting to give us a little bit tiny lighter shade there, but it's still a longer candle. So the MACD normalized, still giving us bearish signal to the downside. But when I look down here at the RSI prime, if I don't know if you're familiar with this at all, DDT, but it turns the RSI into candlesticks with the heat map pattern. And then I put it in the Heikinashi, and we're starting to get a flattening out here of the candles. Typically, when we get that, that's where we start to see moves to the upside. So a little bit of hopium right there on that RSI prime, but when I look at everything else that it's fighting against, not very likely. Could just do a little up and then back down, and that could be that up that I was talking about, and coming into some higher ranges here, grab that liquidity before pulling back down again. Especially when you look at like the daily here, you'll see that pushing up into the 50-day and the market dynamic reactor here, the dynamic reactor from Chart Prime, quantum reactor. We also have a value area low coming off of this fixed range volume profile, which starts in November 2024. So I would not be surprised to see it push up into this range here. That would be about $88,000 to $89,000, and then push to the downside. That would coincide with this shortening out here, give us another move up, and then it turns back on itself for more downside. So yeah, very interesting stuff going on the Bitcoin chart right now. In all reality, what we really got to keep an eye on is the FOMC this week, because if he comes out and he says, hey, we're going to go ahead and cut rates because we feel we're at the economic position to do so, then we could see a little bit of, well, not a little bit, we see a crazy move to the upside. But in reality, that's really what the federal government, which we've been talking about, the Fed needs to get the rates lowered so that the U.S. government can refinance $9.2 trillion in debt. If they do not, you heard a volume nipple, Alex, though, you heard it here first, volume nipples. If they do not get that refinanced, then we either have higher interest rates. If we do refinance it at the higher interest rate that we're at, we would have more higher interest, which we're already maxed out on that right now because most of our GDP is going towards interest. So we don't want that to happen. And if we don't get that refinanced at a lower rate that's affordable for the U.S. government, then we're looking at having to pay $9.2 trillion all at once. And we know what that would look like too. So I think regardless of what happens, we're going to have to see the rates start to come down, whether it be from the process of look at our inflation, job numbers, okay, we're coming down. Those don't look good right now, so I don't think that's the likely avenue of approach on that. I think it's going to end up being more tariff talks and recessionary shakeout. Even if we don't go into a full-blown recession, I think the scare of a recession will get us to where we need to go. So that's what I'm watching there, DDT. I appreciate your input on that. What altcoins are you watching right now? Are you doing any alt stuff right now, or are you just focusing on Bitcoin because it's the main player with all of the uncertainty around it? So
altcoins, for the most part, if I do give setups kind of within Frankie's Discord, it's generally on the higher caps. So obviously, for the most part, it's either ADA, Cardano, XRP, Solana. Those are like the three kind of with the most volume or the best volume kind of altwise, in my view, kind of late. But I have a wizardry here. So I use a thing called Spaghetti. It's just line charts with all the, or when it gets there. So this just lines up all the coins that I look at, all kind of against Bitcoin, and obviously it's on a really low time frame. And you obviously want anything that's like on those or dots now is outperforming. So this basically just shows what's outperforming Bitcoin. So this is kind of my quick look guide into seeing what's good. Obviously, we do have some dot levels that we're looking at. I can show you guys, but obviously as well, it is. So like with that one, that's how we got to dots. And Frankie as well has been looking at dots since the weekend. So yeah, dot at the most part, it's just trading a volume profile. So we have the volume profile here, extended the levels. At this point, it's like double swing failed, SFP, liquidity grabbed, all of that. So ideally what it should do is it shouldn't come back here. It's recaptured the value area low, which you wanted to kind of hold. Kind of almost a bearish candle, even though it's kind of still green for the daily at this point. But at the moment, we're watching this POC because obviously now we've held the value area low, trickled up to the POC of the range, and we'd expect to get up to the value area high. And obviously just treating this as a range trade. So looking at anywhere between like this with this, I might have to go lower time frame to see where I pulled this Fibonacci from. So yeah, we pulled the Fibonacci from this low here at 409 on the 1 hour, and then pulled it to not the higher high, this first high, because that's where it kind of pulled back to first time in this section here. So yeah, looking at this point, based on money flow on the 15-minute is coming down, so it's generally trending down, had a red dot. I actually haven't even looked at my DDT indicators, for those that don't know. So I have an indicator suite of stuff that I've just been messing around with. Obviously, my day job is coding, so indicators came into. So yeah, we had a bearish divergence at the top here, obviously coming down. Money flow is coming down now. So yeah, the level to hold for me for dot now at this point is this kind of zone 410 to 413, 410 to 418. Sorry. So looking there at dot, because of the fact that it was outperforming Bitcoin when we went back to the spaghetti on the first chart I was looking at before this. And yeah, and then obviously if that comes down into there, the target then is the value area high, which is 456. And then depending how price action goes, range trade. You could range trade short here if you get your confirmations. Anything normally I would look at when you're at the top of the range, I'll be looking at more hourly bearish divergences or hourly confirmations. So 1 hour to 4 hour, or like even 30 minute to 2 hour, like those range, to then obviously roll over and then come back down. So yeah, dots is one we are looking at as well, and also as well spot CVD. So dots been one of those projects that's been hammered. So basically, what we did have down here, let me just I can get back off there. So what we did have down here is. I don't know if Coinalyze but in this section here, we had shorts trying to short this level, short the bottom, which isn't a good thing. And then obviously Spot bought up. Spot was buying all the way up, and that's obviously what pushed it and squeezed some of these shorts out back into this value area low, kind of from what we were seeing on Coinalyze. So yeah, sorry, I don't know if Coinalyze open, but Coinalyze shows you kind of what Spot and what futures are doing, kind of the difference in them. So yeah, for the most part, that's dot for now. That's probably the one main one we're looking at for this week to show a little bit more strength against Bitcoin then. But I can share this type of... Oh, no, it's memes. Where's... all you do here, quickly just show you how to do this. Obviously, you set up Bitcoin. Sorry, I got object tree. You set up Bitcoin, and then all you do is you just change once you got Bitcoin set up, then you'll just go into the settings and do kind of change it to a line rather than a price. You change this to percentage rather than regular. You change that to percentage, and then when you add coins in, so hypothetically I wanted to add Aero, just off the top of my head, USDT. You do that, you'll click it, and you'll go same as scale, and then obviously you just add the coin. So basically this is my kind of reference point for quick check, because obviously you want to trade what's strong against Bitcoin if you're going long. And obviously, if you're just shorting, just short ETH. If you're looking to short anything, ETH is the worst, or the best one to short at this point.
Yeah, OC says all the time, F ETH. That's his nemesis token there. So, OC, we're not going to talk about ETH, but I'd like to hear about Link, because we got some Link news coming out, of a lot of Link, and I think there might be an explanation to it. We're going to take a look at this article and stuff. But can you pull up Chainlink and tell us what you're seeing on Chainlink right now, and then we'll take a look at this article before we get out of here. But yeah, DDT, good stuff, man. I like the line chart with the multi thing. I do have a question before we jump into Link with OC. OC has Mexican spaghetti, which he talks about that all the time here on the show. And you got UK spaghetti. Mark Dutch said it probably doesn't have bolognese sauce on it. Is it beans on noodles, man? Just be honest. Is
Yep.
UK spaghetti beans on noodles?
It's beans or fish and chips.
Awesome, man. OC, let's kick it over to your chart here. Let's see what you're seeing on Chainlink. We'll talk about this article, see what the H is going on with Link today. You're muted, OC.
Man, oh man, I mean, sorry for that. Sorry. So talking about spaghetti, we had a lot in here in the chart. So let me just get rid of some of it very quickly. But basically, we ended up having a little bit of a analysis last week where we were acknowledging that we were coming back down here. We had a little range, a possible V-shaped recovery with a little bit of extended movement here. So we were expecting for a Wyckoff, oh man, for a Wyckoff distribution. Give me just 1 second here so I can just show you what I'm talking about here. So this is the Wyckoff distribution that we were expecting. There we go. Basically played out perfectly. And now we are just measuring the range in where we are at the moment. So Link, where are you, Link? Here is. And at this point, we already have marked the top of the range. We could be going for the bottom of the range, and that could be our next entry. Usually, and this is what I'm going to be getting rid of this, usually we enter on a known point or a high probability point where is after the V-shaped recovery, the next important point, which is right here. So this is going to be our area of entry when we have flip of the ribbon. What's going to be our area of exit or taking profits right here on this area, marked basically by the range and the highs at this point. Something important to note, it is that we're having a flip of the ribbon or inverted goose head, which means we could be going farther down to then maybe create a bullish divergence in here if we can get it somewhere around this area, for then grabbing some movement and then making the breakout retest that we were talking about back in, I would say, Friday, I believe so. So yeah, we still locked into that Wyckoff prediction here or calculation. But other than that, that's what I got based on the technicals.
Awesome. Yeah, I'm looking at some stuff here on Link. I got this article that I'm going to bring up right here, and we'll talk about this. And then there's an explanation that someone posted on X, so we'll have to take a look and see what we're thinking here. But based on what you're seeing on the chart, could be that this are some levels that everyone's watching hard, because 640,000 Chainlink withdrawn from exchanges in 24 hours. Is this bullish accumulation? It's currently trading below crucial resistance levels, which could trigger a strong rally if bulls manage to reclaim them. However, volatility and uncertainty, which is that's the two words of the week right there, have dominated the market since the start of the month, keeping Link's price action unstable. Token has seen wild price swings, moving down from $17 down to $13 and briefly rebounding to $16, then collapsing to as low as $11.80. Bulls are now fighting to push Link back above the $15 mark. But despite this uncertainty, on-chain data is showing promising signs. Metrics from Sentiment reveal that 640,000 Link were pulled off of exchanges in a 24-hour window, which is typically a bullish signal. Large withdrawals from exchanges often indicate long-term accumulation as investors move their holdings into private wallets instead of keeping them available to sell on the exchange. If we take a look over here at X, though, there was a post talking about the Chainlink this morning. Where are you, Chainlink post? There we go. That's the ETH one. Here we go. We've noticed multiple wallets withdrawing large amounts of Link from Binance. This is according to Look On Chain. This could be linked to the recent unlocking of 14.875 million Link estimated at $216 million. So they just recently did an unlock, and that could be the reason that we're seeing so much of the Ethereum, or so much of the Chainlink, moving from exchanges over to wallets and cold storage. So I don't know. What do you guys think? Is Link going to get a breakout based on this amount that's moving into long-term storage? The chart's not looking all that great, but is the bottom end on Chainlink right now? I'll ask OC first, and then DDT will kick it over to you and see what you think. What's the call here, man, on Chainlink?
Well, depending on that's going to be a little bit difficult to predict. I will say that we're going to be having a little bit of a bullish run up here, maybe short-lived bullish run up. That is both based on the Wyckoff distribution that we're having, and we already have seen other two distributions. Usually on crypto, I count up to 3 distributions on road, and then I do expect a little bit of a pull up. So I believe that something's cooking. And a little bit of a bullish news may be just enough. Oh, I just was looking at this. Let me just get it to you. There we go. 3 distributions. So basically, first one, second one, third one here. And I'm looking for just some momentum cooking. And you can see that by looking at our consolidation score. That doesn't mean that we don't get the spring. So if we talked about the spring, there we go. This is a lower low before or right below all of the previous low, even on the V-shaped recovery, with an immediate reaction breaking back into the range. So any bullish news might be playing out by first looking at, as we are talking about, maybe even going farther down. Here we go to create that spring. Oh, come on. And then breaking back above it. Another thing that I'm seeing is that we're shorting up the space between the dynamic reactor and the market structure that we have. So that gives me another hope to make that break, along with maybe breaking back above the 0 line. My prediction is, as long as we're breaking above the 0 line, I think we're good, and we're gonna be seeing that bullish movement to at least previous highs. In fact, I'm looking at 1912 for my second TP.
DDT, man, what are your thoughts on this on Chainlink? Do you think that the bottom is in right now on it, or would you just say, you know what, let's take a look at Bitcoin, keep an eye on that. If Bitcoin moves to the upside, then sure. But if Bitcoin's not done, or even Bitcoin's just in a range, Chainlink could have a lower level. I actually see a level of about $11 on Chainlink, $11.30 coming in as a point of control on a fixed range volume profile. What's your thoughts on Chainlink, man?
Chainlink, for me, has to hold in about that $11 range. For the most part, it's obviously sorry, I've got quite a few ranges on here. This was the key range that it was trading in on my chart for quite some time. Obviously went there, broke out, formed a range up top, and then obviously it's now come down. And sorry, apologies about the chart. Chart's a bit messy. But for the most part, this is the key range now for it to hold. It needs to hold, and obviously we don't want it accepted back into this range. So we want it to hold that kind of 11.2, I think it is, give or take. And also as well, the daily SFPs that came down on the daily, they basically hit this value area high already, or kind of swung fail it. So for the most part, it's looking similar, very similar to Bitcoin. It looks as if this momentum wave is going to curve over. Money flow still coming down. So my thought probably would be look for, it had a daily bullish divergence here and it did nothing. Sorry, just clicking. So it had a daily bullish divergence in these, between those two zones there of the momentum waves and market stuff B. That didn't do much. But just looking at the 4 hour for a local bottom, this is kind of one of the time frames I use specifically to kind of time local bottoms or local tops for that matter. And it's something that Jason Casper has kind of taught, but I've learned that from him as well, kind of full disclosure. So it's kind of why as well that I use the 4 hour if I'm looking for kind of bottom picking or top picking. So this is looking as if it could still put in a forward divergence. That's probably, so if this rolls over, you're going to get a red dot of momentum wave there on the 4 hour. That's going to roll over. And then obviously you'd want that to take So you wanted to take out that low there to give you the divergence. So, and also as well, it could give you the 4 hour, kind of plainly speaking, it could give you the 4 hour divergence into that value area high. So the way that we also trade divergences is that the level is key. Your level that you go into with your divergence or kind of where you're trading from is always key. You don't just blindly long a level because it's a key level, right? And you look for confluence when it comes to that level. So for Link specifically, I think there's a good probability or high probability that if it comes back into this value area high, kind of, or takes this wick, the 4 hour bull diff should more than likely be presenting at that point, and then that might be a trigger to go long, provided it holds that level. It's kind of in no man's land at the moment, so it's between kind of a few ranges. It's rejected this POC from this other side, so it's just it's a bit wish-washy for me to kind of say, yeah, I would just long it right here. I would rather wait for it to come low. It's a long. It's just no confluence for me, even on money flow, to kind of, at this point, if I was looking even just EMA trading, EMA and vectors, it's below the 50 EMA, below the 200 EMA on the 1 hour, and that's generally your trending time frame is your 1 hour, kind of the way that I use it. So it's just in no man's land, and probably if I'm looking for any way to trade it long, I'm probably going to give it a go if I get the confidence around 11.2, or actually even higher, closer to 12. But for me, the 4 hour divergence into those levels, or kind of around that level, is probably where I'd probably trigger on a long or look for a long.
Yeah, one thing I'm watching here on Chainlink is we've kind of, you can see these 3 yellow panels here, these channels that I've got. These are kind of like the trading ranges. And if you look here, this was where it was in for, going back to May 2022 all the way up to 2023. So a year and a half, 18 months in this lower range. You kind of have this area here where we went down and tested it perfectly back to this previous resistance and to test it as support. And then up from there, it went up into another range. Right now, we're fighting with that range. But if you look at this fixed range volume profile coming across here, that value area low right now coming in at about $11.26. Back again, that level that you and I are both talking about, $11 to $11.30. If we lose our point of control here and come back down to that, and we don't hold that level, guys, very likely could be looking at going back into our previous channel here again for a retest. So $800 link has been the joke going around. What about $8 link? Can we put that on the list as a possibility if we continue downside burn here on Bitcoin? Very possible. Drop a couple of zeros off of that prediction of $800, and you might have an $8 link, 8.00 in your future for Chainlink. But guys, we're at the top of the hour here. I appreciate you, DDT, OC guy. Always a pleasure to have you on. Didn't give you much time today, but we had a guest and he was rocking it. I wanted to get this info out from DDT. Brilliant trader, and we always appreciate having you on, man. Anytime you want to come back and join us here, DDT, I appreciate you. You're always welcome. OC, you got anything for DDT here before we go?
Absolutely. DDT, thank you so much for joining. Always a pleasure to have you around. Please hit us up whenever you have a chance. I think it's going to be a great show whenever you are here because we can talk some more technicals. I really kind of hold back a little bit with some of the questions that I had on your trading. And also, I think you were missing something on your charts. And that was
Short prime.
Hit us up if you want some chart prime. I mean, I'm very sure that we can provide that for you as an influencer, just so you can try it out, see for yourself, see if you like it, if you hate it, and well, then just use it and profit on it. If that's something that you would like to see, just DM Piper, and we take care of the rest.
Cool. We got you, bro.
Thank you for the opportunity, guys.
Yep, DDT, appreciate you, man. Well, we will definitely have you back on again. You're an amazing trader, and always glad to have your knowledge here on the panel with us at Piper Academy, brother. Guys, that's the top of the hour. We're about to raid into trade wars right now. We got Crypto Bloods over there trading, who we normally redirect to Monday. Today, he's in the trade, and also Trade Flies over there trading. So we got to go see our peeps over there with Crypto Blood and with Crypto Keeper, I should say, on Trade Wars. But guys, until next time, we appreciate you all. You guys are amazing. You're why we do what we do, and we will catch you guys tomorrow morning, same time, right here, 10 a.m. on the Piper Academy Network. This is the Morning Market Report. You guys trade safe. We'll catch you guys next time.
I don't know what they keep telling me. I don't know what they keep telling me. Ain't no school like Piper Academy. Ain't no school like Piper Academy. We'll keep that even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling after the wheels fall low. I know you hungry for knowledge, that's profit appetite. Classes in session, this for the Army Piper acolytes. Trade flag at the soul, train ready. What a line from OCI, from a Mexican spaghetti. Yo, crunch crypto with a deep dive to reject dime. And if you like the visual powered by Chart Prime, then you were part of that alumni, that's all spine. But if you have step, fall back to offline. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling after the wheels fall low. Sound off.
To get with them, the ZTS rhythm. Rip it, Alexandra.
Yeah, that's my alumni, you know what I mean.
That was awesome, dude.